today we are going to talk about one of our stock under coverage, which is Nippon Asset Management Company. And we like this company at current juncture, and that's very important to say for various reasons. Firstly, let me give you the context that what has happened to the stock. Now, stock has corrected almost 45% since October, and this is in line with when correction started in market. And we don't rule out that there can't be more 10-15% correction from current levels. So we are not saying just go right now and buy aggressively, and it may not go down further. But then investment is a different ball game. You can't identify bottoms, you can't identify tops. But let me give you an underline that why we are liking this stock. Firstly, let me talk about the what is the business. Businesses, they manage our money in equity or debt. So first thing we have to see that are they doing good job, and especially in equity markets, because that is where most of the valuation premiums come from. So in equity, we are seeing that out of their main 5 equity schemes, 3 schemes are doing great in their respective segment, and they are doing good job in terms of fund management. Let's now come to the story. The story is into 3 parts. Firstly, the equity culture, and I'm sure you all must have heard from various people that how equity is underpenetrated in India. And let me give you some figures over here. The mutual fund in US constitute 150% of GDP, but in India it is still around 15%. So there is huge scope of penetration of mutual funds into Indian investment culture. Now, I'm not saying it's going to go to 100% or 150%, but there is a lot of room on the upside. The other part which I want to talk about is that right now we don't have any great investment alternatives to invest in. FD is fetching you around 5.5-6% returns. If you look at the conventional gold is not doing that great. It's at higher levels, but not doing that great. Real estate, it's not everyone's cup of tea. And at the same time, the returns have gone much lesser after a lot of regulation. So investment options are less and people are coming to equity. And the third and most important point which one has to see in stocks like NAM India is what is happening to AUM and what is happening to PE. Now, there are 2 ways of judging these kind of companies: the AUM growth and what kind of PE you are assigning. See, in bull market, everything looks great, AUM is growing, and hence market gives them 25 times, 30 times forward-looking PE. But when markets start coming down, the AUM reduces, but AUM doesn't reduce to a very significant pace because the new fund flows are also coming in. And that's the reason you have seen that despite market correcting since October, last 4-5 months, the incremental inflows in equity has gone up. So AUM story is still intact. PE, yes, they used to get multiples of 25-30. Now they are getting multiples of 20 or less than that. So at this point of time, AUM growth, AUM is going down. We have seen peak of around 3,20,000 crores for NAM. Now it is somewhere around 275-280 lakhs crores, including debt and equity. If you look at the timing, valuation wise and AUM wise, both parameters are not very great at this point of time, but that is how you time it. You invest in companies when things are not good, and right now markets are correcting, AUM is correcting, PE devaluation or contraction has happened. At current juncture, a forward-looking PE for NAM India would be around 17 times, which is very attractive. When this cycle change, you will see that because of market going up, the AUM increases, fresh fund flows continue, and the PE, which is right now around 17-18 times, you will see, if not 30, which generally HDFC AMC enjoys, you will see a PE going to probably 20 plus, maybe around 24-25. So this is the story for NAM India, and why we are liking at this juncture. Around current juncture of 265-270, stock is trading around 17 times forward-looking PE. There can be a correction of around 10-15%. So we suggest to accumulate this stock in a range of say around 230-260, and keep this stock in your portfolio for at least couple of years, because when the tide turns, and we have seen after COVID also tide has turned, so this correction in 2022, which looks more like 2011, and we have seen what has happened to equity after 2011. So NAM India at this juncture from valuation perspective is looking quite attractive for us, and hence we suggest to buy. We have recommended NAM India to our clients, and they would be having a buy position over here from investment perspective. Personally, I have not invested in the stock.